Good morning, ladies and gentlemen, and welcome to the LMS Capital PLC annual general meeting. Throughout this recorded meeting, attendees online will be in listen-only mode. Questions are encouraged. They can be submitted using the Q&A tab on the right-hand corner of your screen. Just simply type in your questions and press send. I'd now like to hand over to the board from LMS Capital. Good morning to you all.
Good morning, ladies and gentlemen. It's Robbie Rain, who was until 7 o'clock this morning chairman of the company. I'm delighted to hand over to Jamie Wilson, sitting next to Nick Friedlos, who I've known for many, many years, and is a very active and good director. I've reached a certain age and a certain time in life where it's appropriate to move, and as a consequence, this is a very positive sign for LMS. Jamie, let me pass it over to you.
Robbie, thank you very much, and thank you very much for your service as chair. And good morning, everyone. I'd like to thank Robbie for his service and say that I'm very pleased to take over as chair here. And particularly to have the chance to talk to and meet all of you as shareholders following this meeting, which I particularly look forward to. I'm going to run through some preliminaries now, and then I'm going to ask Nick Friedlos to provide a brief review of the past year and an update on the outlook for the company. So on the preliminaries, I'd like to thank all of you who are connected to this meeting via webcast. The time is just after 11 o'clock, and the registrar has informed me that a quorum is present. I therefore declare the meeting open. And I'd like to welcome at least some of you here in person. And as you'll see, we're broadcasting proceedings over the internet using the Investor Meet Company platform. I should point out that participants joining this via the platform will legally be observers rather than participants of the meeting. We've received a small number of questions from shareholders for consideration at the meeting, and we will cover those at the meeting or promptly thereafter. We're happy to discuss all areas of the company at this meeting, and also equally happy to respond to shareholders' questions in one-on-one conversations, which we look forward to. I'd now like to introduce the board. Sitting next to me is Nick Friedlos, Managing Director, a member of the Investment Committee and the Nominating Committee. Robbie Rain, who will become a director, having stepped down as chair. Peter Harvey, here on my right, non-executive director, chairman of the Audit Committee, member of the Nominating Committee, Remuneration Committee, and Investment Committee. Graham Steadman, unfortunately, can't be here because of a family matter and sends his regrets. He is non-executive director, chairman of the Remuneration Committee, and member of the Audit and Investment Committees. And finally, myself, Jamie Wilson, as your new chair. I'd also like to introduce Alicia Welu on behalf of IQEQ Corporate Services UK Limited, our company secretary. So for the review of the year, you'll no doubt have seen our most recent quarterly NAV update announced on the 8th of May. Our next scheduled NAV update will be on the 30th of with the 30th of June half-year results, which I believe are expected at the end around end July. Thank you, Nick. So before we start the formal business meeting, I'd like to ask Nick Friedlos, our Managing Director, to provide an overview of the company's recent performance this year and its outlook.
Okay, thank you, Jamie. Good morning, everyone. As Jamie said, in the next few minutes, I would like just to reflect on progress in the last year and how we, the board, think about delivery of returns to you, our shareholders, going forwards. So 2023 was encouraging in several respects, particularly the sale of MedHost, and the completion of our first acquisition in retirement living. But the year also had its challenges with Dacian, which we'll talk about, and the news on Brockton in January this year. So for those of you who may not be completely familiar with us or here for the first time, online for the first time, a brief recap: today we are a self-managed investment business. We have a strong balance sheet, and our 31 March NAV position, the most recently reported, showed assets of just over 41 million. I apologise, that is the wrong slide actually. That's the correct slide. So I'll just run through what those are. 10 million of that 41 is basically our mature asset portfolio, which is assets held for resale in the near term. 11.5 million is our energy investment in Dacian. Around 6 million is in Castle View, our retirement living asset, and we still have about 14.5 million pounds of cash on the balance sheet. We have no debt. In 2020, when we returned to self-management, we outlined 3 themes for our investment activity: energy, real estate, and late-stage private equity. We are increasingly focused on real estate, and within real estate, retirement living, as being where we want to concentrate, and I will say more about that in a few minutes. So just recapping on the mature asset portfolio and step you through the balance sheet briefly. As I said, our mature asset portfolio is around 10 million pounds. These investments are generally fund or co-investment interests, which in most cases are managed by third-party managers and were originally invested by LMS some time ago. We do not, in most cases, control the realisation decision on those assets, but we do maintain an active dialogue with all the managers involved, and we have the opportunity to discuss progress with them, and where we think it's relevant to do so, we try to influence or help their decision making. So in terms of realisations, the sale of Medhost late last year was a good result. This was a co-investment we held since 2006. The original investment was repaid with all our money back through some distributions in around about 2013. So effectively, the remaining piece that was on our balance sheet was the profit on the deal. And we're pleased the ultimate exit of that showed a gain of just over £1 million in excess of the amount at which we were carrying it. The remaining assets in the 10 million are 4 main holdings: Brockton Fund, Opus, Elateral, and the Weber Fund. I'm happy to talk about any of those with you, but perhaps in this forum, just to comment on Brockton. In January, the senior lender to the fund's main remaining asset, which is a high-end residential development in Mayfair, the senior lender, which is a lending fund called Apollo, appointed administrators to the scheme because they really wanted to, I think, take control and accelerate the sales process a bit. We have taken a cautious view following that appointment on the valuation. At present, it appears to us that the administrators are following what I would call an orderly sale process, so they're not heavily discounting the apartments to get them sold. They are following an orderly sale process, which is what we would like to see, because that that keeps open the prospect of some value for investors at the end of the day once the bank or the lender has been repaid. However, we do continue to monitor the situation very carefully. We talk to Brockton often, but I think the answer there is sort of so far so good. But it is early days with the administrator. They've only been in there for 3 or 4 months. We do need to keep an eye on that situation. Generally, on the mature assets, timing of realisation is difficult to predict, but optimising their value is very important for our business. And for most of these assets, we always have the opportunity to sell them in the secondary markets to someone else who wants to hold them as an investment. But generally, that will result in a very deeply discounted price to us. So as long as we remain comfortable that the managers are doing a good job, we will usually conclude that it's better to be patient, as we did with MedHost, and of course that actually produced a decent good outcome. So that concludes what I want to say on the mature assets. So turning now to Dacian. So Dacian is our investment in Romanian oil and gas producer, which acquired a number of onshore production assets in Romania 3 years ago. This was a $20 million deal, of which $14 million was provided in the form of loan notes and equity by a consortium of investors led by LMS. And the balance of the $6 million was external senior finance provided at the time of the acquisition. As we have reported, 2023, which was Dacian's second full year of operation, when we took control of the assets at the very back end of 2021. 2023 was a difficult year for them, and it was difficult because they experienced some sort of, equipment and mechanical and engineering issues in their gas production, their gas distribution. So that interrupted production. It caused them loss of revenue. Hence, they generated their cash generation. They sort of generated cash below budget, and also it diverted the team's resources from the planned program of capital projects, which we refer to as workovers, which are designed to deliver incremental increases in production. They were fixing the problem on the gas, very simply put. However, notwithstanding this, Dacian was still continued to service and pay down the senior debt obligations, the $6 million that it had. That debt, which actually absorbs around about $280,000 or $300,000 a month, will be repaid by November this year. So that will ease, that will effectively free up cash for other things in Dacian. It will take the company a bit of time fully to recover and restore its cash cushion. In the near term, its cash for these workover projects is therefore rationed more than it was previously. And the team is really focused at the moment on stabilising production, and also, albeit at lower levels than planned, but also through very active cost management, is increasing the profitability and trying to restore the profitability even at these lower levels of production. And they believe they've got some cost restructuring initiatives and so on, which they are looking at, which they will believe will largely enable them to get their profitability back by the end of the year. The investment case for Dacian was based on a business plan that was predicated on increasing production from the levels prevailing at acquisition. That remains the business plan, albeit it's taking a bit longer than we expected or might have hoped. So the Dacian team is really currently planning to ensure that it's in a position, once that external debt, once that $6 million has been repaid at the end of the year, that it's able to restart the production enhancement activities during 2025, and sort of get us back on the trajectory of growth in production. And we are working with them on that exercise and looking at the planning they're doing. But it's also worth mentioning, I think we referred to this before, the Dacian team has not lost sight of other opportunities open to them. They have very substantial land holdings that came with the oil fields. And there are opportunities to deploy those, for example, in renewable energy. These opportunities potentially represent projects which could be licensed to third parties or given to third parties to run and exploit, for which Dacian will get some kind of economic benefit. Those opportunities were not reflected or baked into the acquisition price at all, so they will represent upside. We can't quantify them at the moment, but they are there and the team is thinking about them. So moving on to retirement living. As we've reported over the last year or so, we've been building knowledge and capability in this sector. Our interest in the sector is driven by a few factors. The demand characteristics in the UK, the demographics demand are very, very favourable to there's a strong need there, and it's not being met at the moment. There's no established or dominant kind of business model or operator working in the sector. There are obviously people in the sector. None of them are really that big, and there are various different models out there, renting them, buying them, different levels of care provided with all part of the package. So there is a variety of business models, and I think that means that the market is open for people to come in and try and do this well and establish an investment platform that is attractive and successful. There are opportunities for consolidation in the market. There are quite a few people who have got maybe 2 villages or 3 villages and don't really know where to go with them from there. So in due course, there are opportunities for consolidation. And I think encouragingly, generally, the investment market in this space is warming up. So recent entrants, we've seen Legal & General, we've seen AXA, we've seen M&G, particularly those two have made relatively recent acquisitions. So it's a sector which I think is at the beginning of its journey. The demographics are strong and supportive. There's no dominant business model. So we think it's a good opportunity for us. And it offers attractive long-term returns. So in December 2023, we made our first acquisition in the sector, which was Castleview Retirement Village in Windsor. This is a well-specified, well-located scheme, completed in 2018. It comprises 64 apartments, 15 of which are still remaining to be sold. COVID and so on interrupted the sales process, not just for this asset in Windsor, but for everybody across in the sector. So we've got 15 apartments to sell with a resale value, or sale value rather, of around about £8.5 million. And in the medium term, the investment should produce an income stream in the £600,000 to £700,000 a year range. We believe that from this cornerstone investment, that we are well placed to deliver a larger investment platform. And we continue to look at both fair development sites where we could go out and build one of these, and also established businesses or standing stock, as we did with Windsor. And we are interested both in the model where you build these and sell them to residents, but also the model where you construct them and rent them. And I think there is room for all these different models in the market. We've established LMS Retirement Living to guide our investment activities, and I'm delighted that Roger Davis, an experienced executive in the sector, and formerly the Chief Executive of Methodist Housing Association, a very big operator in retirement homes, care homes and so on, Roger has agreed to become chair of LMS Retirement Living, which is, as I say, our vehicle for overseeing our investment activity. We have other operational and real estate experience in the team. It's very, very important to us that any scheme we invest in is well run and well operated for its residents. That's really paramount. And Roger in particular is very focused on that and guides us in that area. So we believe the opportunity exists to create a retirement living investment platform that will deliver underlying investment returns and also provide a strong direction for LMS in the quoted market. In order to do this, our priority is to find more sites and acquisition opportunities, and also to identify funding partners. And this is where we will be directing our efforts significantly in the coming months. So to conclude, whilst listed private equity habitually trades at a discount to net asset value, the discount on our shares is way out of line and way too high. We are very aware of that. The board meets regularly and talks regularly, both formally and informally, and we're aware that all our actions need to be measured, and all our strategies need to be measured through the impact of the lens of delivering our goal of delivering returns to shareholders. We believe that we can make progress towards this goal through retirement living, and this, as I said, will be our focus for new investment. And we look forward to reporting progress. That concludes what I was going to say, but very happy to have a discussion or take any questions.
We have some shareholder questions coming.
Okay. Sorry, I'll just absorb this for a moment. So, yeah, I was going to say, I mean, the questions are, I won't try and read them out verbatim, but the questions are really around the extent of the share price discount at the moment and whether or not we should be actually buying shares in. And yeah, there are other things before this meeting, but once the notice of the meeting went out, a number of shareholders emailed me and I actually spoke to them. We were very happy to have calls with shareholders. That is a theme, unsurprisingly, that shareholders ask. So the way we think about that really is that we are one of the challenges we have is our small size, and although in percentage terms quite a large part of our balance sheet is cash, in absolute terms obviously that cash is relatively constrained. As I say, it's 14.5 million. We've struck small size and limits on our absolute cash. So if we return cash to shareholders or in some way or buy back some material number of shares in the market, our view is the one that does almost exacerbates that problem because it consumes cash and it makes the company even smaller. So, whilst we believe that we can invest successfully, and we've talked about retirement living, that's our main focus, we think that the way to be successful is really to use the resources that we've got to pursue that strategy. Clearly, if that strategy ceases to work, and one of the things we as a board do is challenge ourselves all the time, or let's say, are we making sufficient progress? If that changes, then we will be in a different position. But at the moment, given our constrained resources and our belief that we can be successful through building out our retirement living platform, we think that is the way to deploy the cash. And cash that went back to shareholders or went back to shareholders now or was diverted to buying in shares on the market would actually just make that ultimate success more difficult. And that's the theme of a number of questions.
Have you covered other questions that you feel that need addressing here?
Yeah, I have. I had the AGM notice prompted a number of shareholders to ask questions, a lot of them along those lines actually. And I've had quite a lot of calls with people that couldn't get to the meeting. I had quite a lot of calls and discussions with them over the last, well, particularly over the last 4 or 5 weeks. Hopefully, my answers were helpful to them. But as I say, whether coming out specifically today or other questions that shareholders would like to ask, you can always reach us. And I frequently have calls with large and small shareholders.
Any other questions from the floor at this stage? We'll move on to the rest of the business. Okay. Have you finished your remarks?
I have, yes.
Thank you. All right. Moving on to the remainder of our formal business. The notice of annual general meeting together with explanatory notes was published and posted to shareholders on 24th of April 2024. Accordingly, the requisite notice of the meeting has been given. I propose, therefore, that the notice of the meeting should be taken as read. On the voting procedures, I believe there's requests from some shareholders to vote in person. So we're going to allow for that. Most of them have been received electronically. So there will be voting by way of a poll on which each shareholder has one vote for each share held. The final results of the voting, including the proxy votes, will be announced through our regulatory information service and published on our website as soon as reasonably practical. Under the Articles of Association, the company has chairman of the meeting. I call a poll on this resolution in order that the wishes of all members, including those of lodged proxies, will be taken into account. There's no requirement for the poll to be taken immediately, and I therefore propose we proceed with the remainder of the business of the meeting, after which the poll will be conducted. Voting papers were distributed to all shareholders attending in person. Only members of the company or their proxies are entitled to vote. Any member who has already voted by proxy and who doesn't wish to change their vote need not complete a poll card, as their proxy vote will be counted. Please write your full name on voting paper in block capitals if appropriate, the name of the person for whom you're acting as proxy. Please also write the number of shares you're voting in the space provided. If you do not insert the number of shares in voting paper, your vote will be taken to be over your entire holding. Please indicate with X whether you wish to vote for or against the resolution. If you've completed and sent in a proxy, please also indicate this on the voting paper. Finally, please sign the voting paper and hand it to the company secretary. Please note that you can only vote the shares for which you hold in your own name. If the shares are held through a nominee company, then the votes must be cast by that nominee on your behalf. Listen, you have all the votes that you.
Yeah, I have a few poll cards. I think we need to process them and send them to our registrar to finalize the total numbers.
Okay, and there are no others from the room at this stage, correct? Okay. Based on, and this will correct me if I'm wrong, this based on the final result on proxy voting received by the close of the deadline, all resolutions are passed. Is that correct?
It is correct, yeah.
Thank you. As all of the items of business on the notice of meeting have been dealt with, once the poll has been taken and processed, the results will be announced to the market, we believe, later today. Is that correct?
Today, correct.
Thank you. That concludes the business of this meeting. Thank you all for your interest and participation, and I now declare the meeting closed.
That's great. Thank you very much indeed. Can I please ask attendees online not to close this session, as we'll now automatically redirect you for the opportunity to provide your feedback in order that the board can better understand your views and expectations. This may take a few moments to complete, but I'm sure it'll be greatly valued by the company. On behalf of the board of LMS Capital PLC, I'd like to thank you for attending today's annual general meeting, and good afternoon, morning to you all.